Cardano once stormed to a $90 billion market cap with 0 smart contracts. So what happens now that we have more than 130,000 of them? Stick around, because if you think the last bull run was wild, we might be about to make that look like a rehearsal. So here's the scene, right, that stopped me mid-scroll this morning. Right, I'm sipping coffee, half awake, when Lark Davis pops up on my feed practically shouting, "Think bigger." And he isn't just tossing motivational glitter, he's reminding us that back in 2021, Cardano rocketed to $90 billion in value before it could even run a single smart contract. There was no DeFi farms, no NFT mint parties, no on-chain gaming, there was nothing. Now, just the promise of what might come. Now we're standing in 2025 with smart contracts humming away, real businesses building on chain, and a chart that's kind of finally poking its head above a nasty descending wedge. If the last cycle was ice cream with no toppings, this one's looking like a full-blown sundae bar. But let me back up for just a minute, because numbers without a story are just math homework, right? Picture late August 2021. ADA's price is sprinting past $3. Everyone's FOMOing in harder than a teenager at a concert, and the market cap taps that eye-watering $90 billion. I remember staring at the chart thinking there's no way this sticks without smart contracts, and sure enough, it didn't, because soon we tumbled into crypto winter 2.0. Then the FTX drama, then every other kind of black swan headline that you can imagine. Fast forward to today, and ADA's chilling at around that kind of $25 billion in market cap. Price kind of lodged at 50-something cents, like a kind of sprinter who's kind of tipped but never actually on track. Now, here's the kicker. While the price cooled off, the builders did the opposite, right? Tap Tools showed more than 130,000 smart contracts now living on Cardano's mainnet. 130,000. That's like going from an empty parking lot to a full-blown amusement park complete with roller coasters, cotton candy stores, and kids who refuse to leave. Now, DeFi protocols popped up. NFTs got their own little renaissance, if you will. And yes, meme coins sneaked into the party too, because it's crypto. Of course they did. Now, the big difference this time is that real use cases are finally here. Supply chain platforms are tracking coffee beans farm to cup on Cardano. Indie game studios are minting in-game assets that players actually own. And there are even carbon credit projects trying to make tree hugging profitable, right? It's kind of like watching a quiet town suddenly get fiber optic internet. People find a million new ways to use it overnight. But before I go full hype mode, let's talk about the elephant in the blockchain room. Stability, right? 7 years without a single block missed. That nugget comes straight from Cardano Foundation CEO Federic, right? I don't know about you, but in crypto, that kind of uptime is rarer than a kind of bored validator on payday, right? Ethereum's had hiccups, Solana's needed restarts, even Bitcoin's had its infamous halts in the very early days. Cardano, on the other hand, just keeps ticking along like a Swiss watch, only instead of telling time, it's stamping immutable transactions. That's the kind of reliability that doesn't headline on Twitter for some reason, but it's kind of catnip for enterprises who care about, does it break? That kind of memes about dog money. Okay, so let me drop the first problem that's probably dancing in your mind. If everything's so fantastic, why isn't its price already moonwalking? And well, it's a fair point. For most of 2024 and early 2025, ADA was stuck in what felt like a never-ending kind of descending wedge. Lower highs, lower lows, and the whole kind of, catastrophic kind of package, if you will. every pump kind of looked like a mirage. Every dip felt like gravity got stronger. Traders were basically playing hot potato with heartbreak. So when analyst Justin Wu pointed out that ADA finally sliced through that wedge and broke an 8% pop between April 11th and April 12th, well, my group chat lit up like someone discovered free pizza. A breakout after months in the dungeon. Well, that's the kind of technical green light chart nerds kind of write poetry about. But this is crypto, not Disney, right? There's always a dragon guarding the treasure. And after that breakout burst, ADA started crab walking sideways, just above kind of 50 cents or so. Strong support, yes, but also a reminder that resistance hasn't left the building. Now, we flagged two big boss levels, if you will, the $1.2456 and, if the bulls keep their kind of protein intake, $1.46.42. Those numbers, they aren't just random decimals either. They're where kind of a lot of the bag holders from earlier rallies actually kind of plugged in, please just break here, sell orders, right? Burst through those, and well, the charts open up like a highway at 3 a.m. The second challenge is the classic adoption curve. Smart contracts are live, sure, but are they sticky? Right? DeFi total value locked on Cardano is still tiny compared to Ethereum or even relative kind of newcomer chains. Users love flashy yields, and unless ADA's ecosystem can match or exceed those incentives, preferability, without kind of the Ponzi perfume, if you will, the masses, they aren't going to migrate. In other words, you can build a nightclub kind of with perfect acoustics, but if the DJ is playing elevator music, no one's going to be dancing. So here's where things get interesting. Remember how Bitcoin and Ethereum ETFs smashed through the never going to happen wall after years of SEC stonewalling? Well, rumor has it that ADA might be next in line. Polymarket, the place where degens bet on literally everything, puts the possibility of a spot ADA ETF by 2025 at a chunky 46%. Right, that number has been creeping higher ever kind of since Paul Atkins took over at the SEC's kind of big chair, if you will. Now, Atkins isn't exactly a crypto, purist, but he's no kind of critic either. A kind of greenlit ADA ETF, it would kind of mean that pension funds, retirement accounts, and grandma's conservative portfolio could suddenly, effortlessly buy Cardano exposure. That's kind of new ocean-sized liquidity then. So, as a chef would go, let's stir all of these ingredients together. A fully operational smart contract kitchen, if you will. 7 years, zero downtime, bragging rights, a potential ETF on the horizon, a technician's dream breakout. Toss them into a blender and you get Lark Davis's battle cry. Think bigger, right? If $90 billion happened without any this infrastructure, what's a rational market cap now? Double, triple, more? Now, for context, Ethereum's market cap today sits around $500 billion after securing the first mover advantage in smart contracts. If Cardano can capture even a fraction of Ethereum's DeFi TVL or NFT volume, and let's not forget proof-of-stake energy niceness, then a leap back to, and even beyond, all-time highs isn't a moonshot fantasy. It's simple market math, meeting improved fundamentals. Now, let me give you the part where I nearly kind of spilled my coffee. Taptool's charts of contract developments and deployments, it isn't a steady uptick. It's an exponential hockey stick, right? Every time I look, it reminds me of that kind of viral "I bought my mum Bitcoin" video where the curve goes vertical and my mum freaks out, right? Every Contract represents one more mini economy, a lending pool, a token launchpad, a charity escrow, you name it, right? Now that translates into more on-chain volume, which means bigger transaction fees paid in ADA, which means demand pressure on the token. And remember, ADA's supply is capped, right? You can't print more just because people showed up late to the party. And speaking of newbies, let's talk about user experience. If you've ever tried using Cardano dApps 2 years ago, you would felt like assembling IKEA furniture blindfolded. Wallet Connect flows were clunky, transactions times tested your patience, and half of the tutorials assumed you speak fluent developer. But today, the top wallets let you stake, swap, and mint NFTs in a couple of taps. There's even a mobile app that my cousin, who still calls Wi-Fi Wi-Fi, right, managed to navigate, right? And that's not perfect, right? Or it's not perfect, but if you can kind of order tacos from your couch, you can probably farm yield on Cardano now. Now that's progress that you don't always see the candles in the price chart, right? All right then, so big moment. Why does any of this matter beyond the numbers on a screen? Well, it's because Cardano's original vision was about inclusivity, right? Banking the unbanked, lowering fees, providing transparent governance. Cheesy to some, but real if you're in a region where wire transfers are pricier than your rent. As DApps or dApps finally roll out, micro lending or supply chain trackers that farmers in Uganda can actually use, the network's utility becomes less about number go up and more about lives get better. And let's be honest, mission-driven stories stick. Investors love a good narrative almost as much as they love a good healthy ROI. Now, let's pump the brakes. No script about crypto is going to be complete without acknowledging the potholes. Regulation can flip from ETF friendly to lawsuit happy faster than you can say Hinman emails. Now, a high profile hack could crater, I should say, confidence overnight. Competition isn't sleeping, Solana still kind of chasing lightning speeds, right? Ethereum rolling out dank sharding, and layer 2s are multiplying like rabbits on energy drinks. Cardano can't rest on its reliability trophy. It needs to keep shipping updates, growing liquidity, and wooing developers who'd otherwise code in Rust or Solidity. But sometimes a single catalyst changes everything. If that ADA ETF gets the green light, imagine the headlines. Wall Street buys Cardano. Every mainstream outlet covers it. Retail investors fire up the exchanges, and suddenly those resistance levels that Wu talked about look more like politely marked suggestions than concrete ceilings. Remember just how Bitcoin popped after its ETF debuted. Right now, apply that template to an asset with 1/3 the circulating supply and a market cap still in the toddler phase compared to Big Brother Bitcoin. Right? The potential delta is, as Lark says, bigger. So here is where I land after crunching the data, watching the on-chain graphs do vertical dances, and replaying that kind of breakout candle a kind of few too many times. The ingredients for a historic move are on the table. It doesn't mean that they're automatically kind of baked themselves into a perfect cake though. You still need timing, patience, and maybe a dash of luck. But if you were fascinated when Cardano climbed to $90 billion on promises, you might want to grab popcorn now, for those kind of promises are turning into actual product. Quick pause though, if you're nodding along and want more real-time chat about setups, catalysts, and the occasional meme chart, jump into our free crypto Discord server. There's a link in the description down below, and yes, it's genuinely free. We just ask that you bring your best alpha and maybe a GIF or two. Right now, back to the finale. Imagine it's mid-2026. The ETF has gone live. Cardano's DeFi TVL has 10x'd. And that first resistance level 124 is now firm support. Right? Maybe we don't know whether ADA hits $5 or flirts with double digits, but we do know the network is busier than a Friday night dinner, and developers are still shipping. Now, in that world, $90 billion feels like an old high score on an arcade machine that someone forgot to reset. The bottom line, smart contracts are no longer Cardano's wish list. They're in reality. Stability isn't a marketing slogan, it's a 7-year track record. And an ETF approval isn't a pie in the sky. It's a coin flip trending our way. Now, put all of those things together and suddenly think bigger sounds less like hype and more like sensible advice. The question isn't whether Cardano can reclaim its all-time high. The question is, how high can it climb now that it has the fuel that it was missing the last time?